Ladies and gentlemen, the question of trust in the current financial landscape is becoming increasingly complex. According to the latest data from Ortex, the cost to borrow shares in AMC currently stands at 8.9%, a significant drop of 50% over the past 7 days. However, if we shift our attention to a borrowed desk, we are presented with a different picture, indicating a borrowing cost of 32% and a total of 1.4 million shares available for borrowing. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. This stark contrast between sources has led to a state of confusion among investors. We've transitioned from a blame game to a state of bewilderment as a barrage of numbers and information is bombarding us. Price targets, cost bases, and shifting ratings from sell to neutral by various trading agencies have left investors scratching their heads. The price targets provided range from a perplexing $4 to $40, leaving many wondering if these projections account for the effects of a reverse stock split or if they represent an entirely different set of expectations. To put this into perspective, a price target of $4 post-reverse stock split, followed by the stock reaching $40, implies entirely different percentage gains compared to a scenario where the stock simply reaches $40 without considering the split. In the latter case, it essentially equates to $4 in the pre-reverse stock split prices, resulting in no significant difference. However, it's important to note that not all platforms offer the same services or data. Ortex provides a unique set of indicators that may not be directly comparable to those of other apps. What's striking is that, according to Ortex, nearly every parameter is currently in decline. Of particular concern is the utilization rate, which has plummeted to 50.9%. This signifies that a substantial portion of AMC's stock has been released into the open market for trading. If this data is accurate, it raises questions about the significant disparity in the cost to borrow shares when compared to other platforms. Additionally, the short interest value has seen a substantial drop from 34% to 8.7%. These numbers correlate with the shares available for borrowing, which are currently at 0.4 million, according to the latest information. On the flip side, iBorrowed Desk's data suggests that this may indeed be accurate, as the percentage of the float that is currently shorted has dropped by 56%. This leads to the crucial question: where did this sizable portion of shorted stock go? Did some investors decide to take profits and sell their shares, or did they return the borrowed shares to the float? The data shows that only 8.8% of the float is currently on loan, and with the reduced float due to the reverse stock split, there are fewer shares available. However, the distribution of ownership between individuals and institutions should remain unchanged if neither group sold their shares. This means that while the ownership percentage may have shifted due to the split, the distribution within the categories of individual and institutional ownership should have stayed consistent. However, this leads us to a puzzling situation. If we assume that individual investors who held on during the stock's fluctuation from $50 to $70 are still in the game, yet the utilization rate is only at 50%, where did the remaining ownership go? Perhaps the most baffling revelation is the drastic reduction in shares on loan, which has fallen by a staggering 51%. Currently, out of the newly defined float of 150 million shares, only 13 million are on loan. This isn't entirely surprising given the mere 1,400,000 shares available for borrowing. But this raises a fundamental question: where are the rest of the shares? Why are there no signs of 10 million or 15 million shares available for borrowing? The numbers simply don't add up at this point, leaving us with a sense of perplexity. Adding to the intrigue, many speculations have arisen regarding the actions of Aron, especially during previous stock run-ups and significant catalysts dating back to 2021 and 2022. Some suggest that he may have introduced measures that dampened the rallies. Now there's growing anticipation of a major surge in the stock's value, particularly linked to a potential involvement of Taylor Swift. The pressing question is whether Aron will announce the issuance of more shares, either before or after this potentially pivotal catalyst involving Taylor Swift. Such a move could validate his historical pattern of suppressing the stock's upward momentum during significant rallies. While nothing is certain, these speculations certainly warrant consideration as we look ahead to the future. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.